Yes, yes, yes.
Yes, ma'am. मी करते join.
What did you say, Stella?
Yes, ma'am.
Hello?
Hello.
Yes, Stella. Tell me. You were saying something? Or we can start now. Have you joined?
मैम मैं start करते join करते मैम ये एक
You have not joined on Google Meet because I have not received any notification to add you or admit you in that meet specifically, because I receive a notification to admit a person in
yes
that.
ma'am.
You can just join it. Okay, Shalan, am I audible now clearly?
Yes, ma'am. Yes, ma'am.
Okay, we will start now. So yesterday we saw, right, there are various types of sector: organized sector and unorganized sector. Organized sector was the sector which had the directions and control of the central bank, while unorganized sector comprised of indigenous banks and money lenders which were not under the direct directions or control of the Reserve Bank of India. Now we will see sub-markets of organized money market. Okay, so what they are saying, the organized sector of Indian money market is further classified into sub-markets. Just a minute. Okay, fine. So, it has the following money market instruments. In this organized sector, we can find different types of instruments which are short term. Money market relates to short term instruments, right? Where borrowers and lenders are providing, like borrowers and lenders deal in short term instruments which are liquid, right? In last lecture we discussed, Shela. So now we will be seeing what are these short-term instruments in the money market. First one is call money and notice money. Second one is the commercial bill. Third, treasury bill. Then we have commercial papers, certificate of deposit, interbank participation certificate, and collateral loan market. Now we will see in detail what are these type of instruments. We'll get to know more knowledge about them. So, call and notice money market. So, this is the money which is lent by the commercial banks for a short duration of time to meet their cash requirements. So, for a overnight, like 1 day or within 14 days. So, these are the short term money requirements which are provided by the commercial bank to meet the cash requirements. So, the call and notice market constitutes the core of Indian money market. Call money represents the amount borrowed by commercial banks from each other for short period to meet their cash requirement. See, what is this type is, in a call or notice market, what is happening? There are two commercial banks. One is State Bank of India, other is HDFC Bank. So, when the State Bank of India needs short-term money, it approaches another commercial bank, HDFC, and says, provide me cash in terms of loan for a period which is short, like 1 day, 14 days. So, for short period, and this bank provides the loan. So, between the commercial bank, when one commercial bank approaches another commercial bank for short-term requirement of funds, that is called as call or notice money market. Okay. So, we will see. Those banks whose reserves decline below the statutory requirement borrow from such banks which have surplus cash reserves. Funds are thus borrowed and lent for 1 day, call or and for period up to 14 days notice without any collateral security. See, they can borrow for 1 day, which is a call, and for notice, which is 14 days. But in this borrowing purpose and lending transaction, there is no security. Like the bank is not taking any security. Like if the other bank does not pay this call or notice, what will happen? It will be a problem. It will be a loss to another bank because there is no security. We are not taking any mortgage, right? Like gold or house or land. That if the bank does not pay us, we will sell that security and get the money. But in this case, in call and notice, there is no security provided by one bank to the another bank. The market has two segments, call or overnight market and short notice market. The rate at which funds are borrowed and lent in this market is called call money rate. See, when one commercial bank approaches another commercial bank for short-term funds, which is call or notice, like call will be for 1 day and notice for 14 days, we have to pay some interest to the another commercial bank, right? We cannot just take that amount on credit without paying any interest. So that interest rate which is determined is called as call money rate. Okay. And how is this rate determined? With the help of demand and supply factors. Demand and supply factors means what? If the another commercial bank, see in this case we saw HDFC Bank, many commercial banks are approaching this HDFC Bank. So the demand for call or notice is high. But the amount available with the HDFC Bank to give this commercial banks on a short period of time, that is call or notice, is less. So in this case, the rate will be high. But if there is another case scenario, that is vice versa, HDFC Bank is not approached by much banks for commercial banks for call or notice borrowings, what will happen? And it has large cash surplus, then in that case the rate will be low. Clear, Sheila?
Yes, ma'am.
Now we will see what are commercial bill market. So in the last lecture we discussed what is a bill of exchange. Are you able to recall, Sheila, what is a bill of exchange? See, when I am a buyer and I buy goods from a person who is a seller. I bought some raw material from one person, that is a seller. Okay. So seller gave me that raw material. I bought it on credit. So now the seller will naturally be thinking that if the buyer did not pay me, so the seller will ask the buyer that write in writing, give me that you will pay this amount of the goods purchased within a specific duration, that is 2 months, 3 months. So if the buyer says yes, I will give this in writing that I will pay the total amount of the goods, which is suppose 1 lakh rupees after 2 months. I am giving it in writing to the seller and I prepare it a bill of exchange, write that within 2 months I will pay 1 lakh rupees and I give this bill of exchange to the seller. Okay. So seller gets this bill of exchange. Now if the seller requires this money, he cannot approach the buyer. It's like because the buyer said that I will pay after 3 months. So if he is in urgent need of funds, what he will do, he will take this bill of exchange and go to the bank. Now, if the bill of exchange is 1 lakh rupees, bank will deduct some commission percentage. If it deducts 5%, what we can see is 2%. So 2000 rupees the bank kept with itself and gave 98,000 rupees to the seller. Now, after 3 months, what the bank will do? The bank will again go to the buyer who had promised to pay the seller and take this 1 lakh rupees, recover this 1 lakh rupees from the buyer. Are you clear with this process, Chela? How a bill of exchange is operating?
Yes, ma'am.
So these are known as commercial bills, that is bill of exchange. So these are very liquid, right? The seller can approach the bank immediately when the buyer gives the bill of exchange and get the amount after deduction of bank's commission. He does not have to wait for 3 months after which the buyer will pay him the amount. So these are liquid instruments, so they fall under the money market. So we'll see. These bills are bills of exchange done by the seller drawer on the buyer drawee for the value of goods sold. Someone wants to join, just a minute. Who is here? This is why I am not able to see him. Again he will join. It is on shit. It's here, na? Okay, we'll try to join again. Once the bill is accepted by the buyer of the goods, that is the drawee, it becomes a legal document acknowledging indebtedness. Means what? When the buyer accepts this bill of exchange, it is a document stating that the buyer has to pay the seller this amount and he has the obligation to pay to the seller. It is a negotiable instrument. Negotiable means we can give it to the bank and we can get it discounted and get the amount. Such bills are generally drawn for 90 days. During the tenure of the bill, if the holder is in need of cash, see, we discussed, if the seller requires cash, buyer will give the seller the bill of exchange. So if the seller can't wait for 3 months for the cash, what he'll do? He will approach the bank and get the money. Holder is in need of cash, he will discount it with the commercial bank. The bank will deduct the interest called negotiated discount rate. For the period the bill is yet to return, the bank will receive the face value on the due date from the drawee. Meanwhile, if the bank is in need of funds, it can rediscount the commercial bill rediscount market at the market related discount rate. Banks arrange their bill portfolio in such manner that some bills mature every day. These trade bills are considered liquid assets as they can be converted into cash quickly by rediscounting, right? These are very liquid assets. The seller does not need to wait for 3 months when the buyer will pay the amount. If he wants the amount immediately, he can go to a bank, get it discounted and get the amount. So it is a very liquid asset. Treasury bills market. So treasury bills are short-term promissory bills which are issued by the government of India to get some funds for its whatever may be the requirement to develop infrastructure, facilities or for a specific purpose from the general public. Treasury bills are short-term promissory notes issued by the government of India at discount, generally for a period of 91 days. See, when the treasury bills are issued at discount, see, if the price of the treasury bill is, say, suppose 1000, the government of India is issuing it at discount, means it will take only 900 rupees. And at the start it will take only 900 rupees, so I will pay 900 rupees. But after, see, 5 years, the bill matures, how much will I receive? 900 or 1000, Sheila? What do you think? I will receive 1000 rupees because the bill is issued at discount. The price of the bill was initially 1000 treasury bill, but the government issued it at discount, less than its price. So it asked the person to give, general public to give only 900 rupees, 900 paid. So when matured, it will get 1000 rupees. But since the bill is issued at discount, it will not get any interest rate. The benefit will be what? 100 rupees. Because at the start I gave 900. On maturity, I'll get 1000. So the benefit is 100 rupees. Right, Sheila? But I will not receive any interest. Why? If it was issued at par value, that is 1000 rupees, then the government would have given me interest. Since it is issued at discount, then the face value, that is 1000 rupees bill, is given at 900. So these treasury bills will not get any interest. Clear, Sheila? Any doubt on this? So the treasury bills issued by the government of India, on these interest is not paid since they are issued at discount by the government. Any doubts?
No, ma'am.
Okay. So we will read this. Treasury bills are short-term promissory notes issued by the government of India at discount, generally for a period of 91 days. These are issued to meet short-term financial needs of the government. Since November 1986, 182 days treasury bills were issued by RBI. Longer maturity treasury bills with varying maturities up to 364 days were introduced in April 1992. These bills were issued as a part of public debt operations of the government of India. They are issued at discount. See, we discussed 1000 rupee bill will be issued at 900. So at the start, I will pay 900 to the government, and on maturity, government will pay me 1000 rupees. So no interest. And therefore, they do not carry interest payment obligation. Next are commercial papers. On the recommendation of Waghul Working Group, commercial paper is introduced in the Indian money market in January 1990. The need for the introduction of this instrument has arisen out of the changing industrial scenario. In the environment created by liberalization policies of the government, the industrial sector launched plans of diversification, expansion, and modernization of their units. This has led to an enhanced demand for funds, and to satisfy, commercial bills were introduced. What are commercial bills? So commercial bills, again, it is a money market instrument. These are short-term instruments issued. Treasury bills were issued by the government, like commercial bills will be issued by the corporations. Corporations means companies for meeting their short-term requirement of funds. And these are unsecured. Unsecured means what? There is no again security taken for issuing the bill. See, if I take a commercial bill from any organization and that organization goes bankrupt or insolvent, in that case I will not be receiving the amount of that commercial bill. So these are unsecured instruments. Commercial bills are unsecured promissory notes issued by the corporate entities to raise resources for their short-term needs instead of borrowing from banks. It is a certificate evidencing an unsecured corporate debt for short-term maturity. It represents a promise by the borrowing company to repay the loan at specific date. So the company is giving a promise that I will pay the loan at a specific date for a specific interest rate. Next are certificate of deposit. Certificate of deposits are the same like FDs which we do with commercial banks. So we get an interest rate with the commercial banks for these certificate of deposits. The RBI introduced the Certificate of Deposit scheme in June 1989. The object is to further widen the range of money market instruments and to give investors further opportunity to deploy their short-term funds. Certificate of deposits are deposit receipts issued by banks against deposits kept by individual companies, public sector enterprise. PSUs here are public sector enterprises, like the companies which are not private, which are completely owned or major part of them is owned by the government. Those are public sector enterprises. And other institutions. Non-resident Indian can also subscribe to CDs but only on a non-repatriation basis. Non-resident Indian means what? An Indian who is of Indian origin, that is, who is born in India but he is residing outside India in a foreign country. So this person can also subscribe to CDs, that is certificate of deposits within India. So interbank term money market. See, again, it is interbank money term market means what? Again, when there are borrowing that is in money market takes place for short duration. Short duration, right? And interbank means what? There are two commercial banks, SBI, HDFC, or another cooperative bank which we can say. Cooperative banks like Thane Janata, Sahkari, Patpedi, like these are cooperative banks. So when these cooperative banks or commercial banks provide credit to each other for a shorter duration of time between themselves, it is called as interbank money market. This is a market in which banks allow both commercial and cooperative banks participate. They borrow and lend funds from each other for a period over 14 days and generally up to 90 days, like for a short duration of time. No collateral security is insisted upon. Again, it is a short term and collateral is not required. The rate of interest are market determined. Deposited receipts are exchanged. As per the Indian Bank Association rules, lenders cannot prematurely call back these loans. Hence, this instrument is not liquid. What they are saying is that lenders cannot prematurely call back these loans. Suppose I am a State Bank of India and this is HDFC Bank. So Intermoney Bank, I required some funds for a short duration like 14 days. So approached HDFC Bank and HDFC Bank gave me those funds say for 14 days duration. Now once HDFC Bank has given me suppose 20,000 rupees for 14 days, and after 14 days I will pay back the HDFC Bank this amount. Once HDFC Bank gives this 20,000 rupees, after 14 days only HDFC Bank can recover this amount from State Bank of India. Before 14 days, HDFC Bank cannot say that, oh, I don't have money now, I gave you by mistake this loan, now give me back my loan. So this is not allowed. After the duration, only HDFC Bank can approach State Bank for the recovery of the short-term funds which it has lended. That only they are saying that before maturity, they cannot call back these loans. They cannot recover these loans before maturity. Collateral loan market. The name only suggests here that a loan market which is collateral, that is secured loans. Like we are providing a collateral for the purpose of getting that loan. The collateral may be in the form of gold which is kept as a mortgage. It can be a house which is kept as a mortgage. It can be a land which is kept as a mortgage. So collateral loans are very secure loans, because Chela, what happens if as a bank, if the person, I am trying to recover the amount from the person, but the person is unable to pay the amount due to any case like insolvency, or he has lost his job, or any bankruptcy, what the bank can do, the bank can sell this collateral, that is the gold, the house or a land which is kept, and recover that loan. So these loans are good for the bank. So secured or collateral loans are very beneficial in terms of comparison of unsecured loans, because these do not lead to NPA, that is non-performing assets of the bank. In the last lecture we discussed, Sheila, right, what are non-performing assets? When a bank is unable to recover that loan amount, we call it as a bad loan, which is a non-performing asset. You recall, Sheila?
Yes, ma'am.
So it deals in collateral loans. These loans are backed up by security. In this market, commercial banks provide loans against government securities and bonds. So what are the securities? Collateral which is provided is government security or bond. Government securities we saw like treasury bills. So if I have a treasury bill, money market instrument, I will keep it with the bank and get the loan. Or bond. If I have that bond document, I will keep it with the bank and get the loan. So now we are moving forward to what are the defects in the Indian money market. The Indian money market is inadequately developed. It means that it is not much developed. There is no huge expansion of the money market in India. Loosely organized and suffers from many weaknesses. Major defects can be discussed below. Dichotomy between organized and unorganized sector. What does this mean is that we saw there are two sectors in the Indian money market, organized sector and unorganized sector. Under the organized sector, it comprises of banks, other institutions which are governed by the directions of Reserve Bank of India. And in the unorganized sector, we have indigenous banks and money lenders which are not under the control of Reserve Bank of India. Right, Sheila? So, dichotomy of unorganized and organized sector means that organized sector and unorganized sector do not have proper cooperation between them. So, when there is no proper cooperation, the money market is not under proper management, right? So, that's the problem of dichotomy. The most important defect in the money market in India is its division between two sectors, the organized sector and the unorganized sector. There is little contract, coordination and cooperation between the two sectors. It means what? There is cooperation and coordination is not at all there between these two sectors. In such conditions, what happens? It is difficult for the Reserve Bank to ensure uniform and effective implementations of its monetary policy in both the sectors. So the RBI uses various monetary policies, like Shela, you recall we discussed in last open market operations, variation reserve, that is the cash reserve ratio, moral suasion, right?
Yes, ma'am.
Hello?
Hello?
So we saw these monetary policies, like
Yes, ma'am.
So when there is no proper cooperation between the organized and unorganized sector, it becomes difficult for RBI to properly initiate these monetary policies like moral suasion, open market operations, and variation reserve, that is cash reserve ratio. Now what we will see? Predominance of unorganized sector. We saw in the unorganized sector there are indigenous banks and money lenders. Another important defect in the Indian money market is the predominance of unorganized sector. These indigenous bankers, which constitute a large portion of the money market, remain outside the unorganized sector. Therefore, they seriously restrict the Reserve Bank's control over the money markets. The problem you got, Shela, the unorganized sector, that is the indigenous banks, are large in numbers in this money market. The portion of indigenous banks and money lenders is huge in the money market. So the portion of unorganized sector is more than organized sector. So when this unorganized sector is in larger proportion than the unorganized sector is in a larger proportion than the organized sector, the Reserve Bank only has control over the organized sector, right, Shela? So the most part of the money market is unorganized sector. So the Reserve Bank does not have much control over this sector because it is unorganized. Major people there in the money market are of unorganized sector. So the Reserve Bank is not able to control it much because this unorganized sector does not come under the directions or control of the Reserve Bank. Clear, Shela?
Yes, ma'am.
Now we will see wasteful competition. Wasteful competition exists not only between the organized and unorganized sector, but also among the members of the two sectors. The relation between various segments of money market is not cordial. They are loosely connected with each other and follow separatist tendencies. Similarly, competition exists between Indian commercial banks and foreign banks. So another problem is what? There is a competition in the money market between the organized and unorganized sector. Again, not just between the organized and unorganized sector, but also among the members in these sectors. So they are not considering all of them, organized and unorganized sector, don't consider themselves as friends or whatever. They are not helping each other or connecting with each other in a way which will help to grow the money market. Instead, they are thinking that they are competitors of one another. So in this, there is no proper growth of the money market. Absence of all India money market. So they are saying what? Absence of all India money market. Like you saw, for capital markets, that is stock market or securities market, all over India we will have only we'll have BSE and NSE, and this is the market through which all the people in India will operate, right? So in India there will be, for all the Indians, there are only one market. But in case of money market, what is the problem is that people are not considered, all market is not considered as a one market. People are into various segments, like Mumbai is a different money market, Pune will be a different money market, other than Bangalore, then Hyderabad, Delhi, another segments. It is in segments. There is no one single market through which the money market operates in India. It is split up into different segments. But in case of capital markets, what we saw, like stocks and securities, there is only one market in India. Indian money market has been organized into a single integrated all India market. It is divided into small segments, mostly catering the local financial needs. Like Mumbai money market will be a different, Pune money market will be a different. So that much local area, only that money market will operate. It will not be a one single market for India. For example, there is little contract between the money market in bigger cities like Mumbai, Chennai, Kolkata, and in smaller towns. Next is inadequate banking facilities. See, for the money market which we have for short-term financial needs of investing in short-term liquid instruments, the banking facilities available are less, and literally in what we can say in rural areas or certain areas of India, these banking facilities are not at all available. That's why the money market in India is not growing that much. Indian money market is inadequate to meet the financial needs of the economy. Although there has been rapid expansion of banks in the recent years, particularly after the nationalization of bank, yet vast rural areas still exist without banking facilities, right? So in the rural areas, the banking facilities are not properly available. That's why the money market in India is not growing. As compared to the size and population of the country, the banking institutions are not enough. Next is what? Shortage of capital. In the money market, see what we saw in the capital market or securities market or stock market, many people are enthusiastic to invest in capital markets rather than in money market, right? What we can see in the current scenario, capital markets, that is the stock market or securities market, many people are enthusiastic to invest. But in money market, which helps in short-term funds financing, which is a liquid market, many people are not that much enthusiastic to invest. So the amount of capital which we have, which the money market receives, is less compared to the capital markets. So in that scenario, when there is shortage of capital only, the money market will not at all grow, right? People will not buy more money market instruments, and that's why the money market is not growing that much. Indian money market suffers from the shortage of capital funds. The availability of capital in the money market is insufficient to meet the needs of industry and trade in the country. Seasonal shortage of funds. A major drawback of Indian money market is the seasonal stringency of credit and higher interest during a particular period. See, what they are saying is that during a slack season, slack means what? When there is no demand. There is no much demand for the credit. During July and October, the demand for credit will be less, and the rate of interest declines sharply. So it is a seasonal market. Season means what? It will depend upon the economic scenarios, market conditions, particular season. In that season, if there is a slack, so the availability of that much capital will not be available. So these seasonal fluctuations can be seen in the money market. So that's why the interest rates will increase, decrease with the availability of funds and the market scenarios, lag everything. Diversity of interest rates. See, again, what we saw is that this money market in India is not one single market. It is split up into different segments, like Mumbai will be different, Pune different segment, and people operate in that local particular market. So due to this diversity, the interest rates are also different for different segments. Like Mumbai will have a different money interest rate, Pune different. Then again, due to the seasonal variations, due to slag and other changes in the business environment, the interest rates will keep on changing. So there are no constant interest rates in this money market. These keep on fluctuating. Another defect of Indian money market is the multiplicity and disparity of interest rates. The interest rates also differ in various centers like Mumbai, Kolkata. Variations in the interest rate structure are largely due to credit immobility because of inadequate, costly and time consuming means of transferring money. Disparities in the interest rate adversely affect the smooth and effective functioning of the money market, right? It will affect, see, if I am in Mumbai and another person is in Pune and they operate in the same money market, if Mumbai interest rates provided in Mumbai are more than Pune, people will go at that particular area or purchase from that particular area. So these disparities create complications in effective functioning of that particular money market. Absence of bill market. Bill market means what we saw, those bill of exchange, right? Bills receivable, buyer, seller. You recall, Sheila?
Yes,
We saw
yes,
it
ma'am.
now. Here, there is a seller, there is a buyer. The seller sells the goods to the buyer. Then he asks on credit. So the seller asks for a note to provide that after 3 months he will pay 1 lakh rupees the amount of goods. The buyer prepares that particular bill of receivable and gives it to the seller. The seller then goes, if he requires fund, he goes to the bank, he discounts it, gets the money. After 3 months, the bank approaches the buyer to get the whole amount, 1 lakh rupees of the bills of exchange, right?
Yes, ma'am.
So they are saying what? This bills of exchange market, which is not that much grown in the money market. The existence of a well-organized bill market is essential for proper and efficient working of money market. But this bill market is not that much grown in India. That's why the money market in India is not growing. Unfortunately, in spite of serious efforts made by the Reserve Bank of India, the bill market in India has not yet fully developed. The short-term bills form a much smaller portion of the banking finance in India as compared to advanced countries. So in India, the bill market has not grown that much compared to the advanced countries like developed countries like US and Europe. There the bill market has grown a lot and its bills are widely acceptable. People are using it widely or more frequently. But in India, the bill market or the bill of exchange is not used that frequently. So when it is not used, bill market is very essential component for effective functioning of money market. Since it is not used frequently and not much developed in India, the money market in India is not growing. Now we will see what measures can be taken to improve the Indian money market. Measures to improve Indian money market. Now we saw what were the defects in the Indian money market. So there should be certain measures taken by the government so that these defects reduce and the money market in India grows. So what are these measures which will be taken by the government? The activities of the indigenous bank should be brought under the effective control of Reserve Bank of India. See why it is required. See, we discussed. There are two sectors in the money market, organized sector, unorganized sector. But the organized sector comprises of indigenous banks and money lenders. So the portion of unorganized sector, that is the indigenous banks and money lenders, is huge in money market. So when it is huge in money market, these do not come under the directions of Reserve Bank of India. So the main problem is that the Reserve Bank of India is not able to control the money market. So the Reserve Bank is able to control the money market in India. What measures should be taken is that this unorganized sector, that is indigenous banks and money lenders, should be brought under the control of Reserve Bank of control and directions of Reserve Bank of India. Hundis used in the money market should be standardized and written in uniform manner to develop an all India money market. So what a hundi is? Do you have any idea, Sheila?
Yes, ma'am.
Hundis. See, hundis are the same like bill of exchange. Same like brother sister bill of exchange. In traditional system, instead of bill of exchange, the hundis were used. Same like bill of exchange what we discussed. There is a seller, there is a buyer. The buyer buys the goods from the seller on credit. The seller asks the buyer to give a note that you will pay the amount after a particular period, and in that case the buyer gives the seller a hundi. So what they are saying is that these hundis or bills of exchange should be in a standardized format so that they can be taken in an all India money market. Banking facilities should be expanded, especially in unbanked and neglected areas. One defect what we saw, Sheila, previously was the Indian money market is not developing because the problem is that banking facilities are not available in rural areas that much. So to money market to grow in India, proper banking facilities must be provided in rural areas as well. Discounting and rediscounting facilities should be expanded in a way to develop the bill market in the country. So what another problem we saw, like the bill market is also not that much developed in India compared to the advanced countries like foreign countries like US and Europe, where the bill market is more or advancedly developed. So in this scenario, we should develop the bill market in India. So that's why what will happen? In turn, the money market will grow, because what we saw previously, for an efficient functioning of money market, the bill market must be well developed in that country. So we should develop our bill market so that the money market will grow. For raising the efficiency of the money market, the number of the clearing houses in the country should be increased and their working improved. See, proper clearing houses should be there in India, so that and their working should be proper, so the money market in India will grow. Now, adequate and less costly remittance facilities should be provided to the businessman to increase the mobility of capital. See, adequate facilities should also be available to these businessmen, and variations in the interest rate should be reduced. See, problem in the money market what we saw was there is a diversity in the interest rates. As why? Because the people are in segments like capital market, which was stock or securities market. There is no diversity. The price of the stock will be same for a person in Pune and Mumbai, right? Because there is all India one market for capital markets. But for money market, since the money market is split into different segments like Mumbai, Pune, Bangalore, Kolkata, Delhi, the interest rates are different. Due to this diversity, there creates a problem in the growth of the money market. So this diversity in the interest rate should be reduced. Now we will move further. The next topic, that is economic and business environment. Screen is visible. Just a minute, I'll erase this. Up till now, any doubts, Sheila?
No, ma'am.
No, na?
No, no, ma'am.
Okay. There are any doubts you can ask up till now, so that I will clear it and then we will move further. Okay. So we will move to the next topic, that is pestle analysis. What is pestle analysis? Here, see, if I want to start a new business in any country, so I have to take into consideration the various factors in that particular region or that country to start my business, and I have to abide by those factors and then operate my business. So those factors can be which? Political factors, which what relates to the government, how the government is, how stable the government is there, like is the government is the government a republic government, or like there is monopoly of that government, or there is dictonomy of that government. There is economic. Economic means what? Proper infrastructure facilities are available in that particular region or that country. Other facilities like proper raw material supply will I get, what other labor will I get, proper cheap labor, skilled labor in that particular country or that area. Then are societal factors, like if I produce these goods, will the people, general public, according to their taste, preferences, will they consume these goods? These are the societal factors. Next is technological factors. Technology means what? What technology should I use so that if I operate in this particular business or particular domain, my product will be a good product, quality product with unique features, and my cost will be less. And the technology which I am using is not obsolete compared to my competitors. Next are environmental factors. Environmental factors means what? Proper that country is a stable country. Like if in such some countries there are always earthquakes appearing, like so if there are constant earthquakes, my business will get affected. I will not be able to do proper production. I will not be able to produce properly. Other environmental factor could be what? Raw material. So proper raw material, natural resource, if it is a natural resource, will I be able to get that? Then are legal factors. Legal factor means what? If I am starting a new business or operating in a particular business, I have to follow some rules and regulations, right? If those rules, I don't follow these rules and regulations according to the particular country, I will be fined. My products will not be taken, they might be banned by that country. So I have to take into consideration these legal factors and then produce whatever. See, again, environmental factor could be that country or that particular locality has a rule that you should, after for environmental, I am producing certain pollutants or I am producing some pollutants. So after they are saying that after I clean these pollutants, then only I should release those pollutants into the river. So this can be various factors while starting a new business or operating as a business, the organization should take into consideration. So these are these pestle factors. Got a summary of this? What are pestle factors and why they are required for an organization to take into consideration before starting a business or while operating as an organization. Clear, Shela? Got a just a quick summary of what we are going to discuss now?
Yes, ma'am.
So we will discuss it in more detail now. Meaning of economic and business environment. Business organizations operate under its own environment. Environment always influences the business and vice versa. So environment plays a very important factor in influencing the business. So business cannot ignore environmental impacts. In the modern economy, the nature and techniques of business are rapidly changing along with the change in the environment. With the revolution in the information technology, the pattern of business has undergone a sea change. You know, the revolutions in information technology are coming constantly, right? AI, now there is an AI, now there is chat GPT. Now what they are saying is that the CEO of NVIDIA was saying, do farming, don't do coding. Because for coding, chat GPT will do most of the coding part. So this AI and this technology is bringing rapid changes and various changes in our day-to-day life, right Sheila? You might be hearing, right? AI, chat GPT, Gen AI.
Yes, ma'am.
So these what we are saying, coders will not be required, much coding part will not be required. This chat GPT and AI will do most of the coding part. So,
yes, ma'am.
So these are the rapid technological advancements which we are facing in this era. The concept of e-commerce, eBay were non-existent in the past. Extensive use of internet in the business has reduced the entire world into a single village, and physical boundaries between nations have vanished in thin air. So now with the help of internet, even if a person is staying in a rural area, he can get access to all the information. Previously what the problem was, if a person is staying in the urban area, he will have all the necessary information required because people in urban area are educated, they know, they network. But in a person who is in a rural area where people are not much educated, even with the help of internet facility, he can learn anything from anywhere, right? And get all the information required due to this internet. Recently, the worldwide attack of coronavirus has further changed the patterns of business. See, due to corona, everything has changed completely. Right? People have become more conscious about their health. Second thing, the technology is also improving. We were able to work from home, we were able to work hybrid, no need to go to office. Now people become more conscious about their health, more technology driven improvements were made. So there is changes according to the environment, these changes take place. Contactless business has made us more dependent on internet. COVID-19, the disease from coronavirus pandemic, has opened up new avenues of business, particularly in education and health sector. See, for health sector, it was a major revolution. Like people started buying health insurance after corona much, right, Sheila? They became more conscious about their health. Health insurance and life insurance policies were sold much, right?
Yes, ma'am.
So that changes keep coming as per the situation, and education sector also got a huge reform. Like people started teaching online. Previously face to face physical contact was necessary for education purpose, but educational sector came with a new reform, like online teaching became more feasible for these people and more convenient. The mushroom growth of tutorials for online classes and pathological COVID test vaccination centers are some of the glaring examples of surrenders. See, after corona, people started pathological tests, many people did their tests, many people took the 3 vaccinations of corona. So this health sector came under a huge reformation. Business. The term business means any activity comprising of manufacturing, producing of products and services, purchase of raw material and marketing the finished goods in order to earn profit. See, what they are saying is that business can be a trading business. Trading and normal production business is different. Do you know, Sheila?
Yes, ma'am.
Trading means what? I am buying a particular thing. I am increase at a particular price. See, I bought something for rupees 100. Grocery, or I am a grocery dealer. I bought a grocery for rupees 100. I added my profit margin of 10%, 10 rupees, and I sold it to the customer as grocery for 110. So that is what? That is trading. That is not manufacturing, right? We are not converting raw material into finished goods to sell that product, right? So that is pure trading. So this trading is also a business. And manufacturing, what we know, bringing raw material and converting it into finished goods is also a business. Then what can be under the business? Services. Any kind of services which are provided like doctor, lawyer, any other services could also be treated as a business. Another thing, what? Marketing. If I am marketing something, that is also a business, right? So these are the various terms which come under the category of business. It is not just confined to manufacturing or bringing raw material and converting into finished goods is a business. It could be a service, it could be trading, it could be marketing, any other thing, okay? Where the main motive is to earn profit. Profit is the difference between the total revenue and total cost. Profit is reward or remuneration for risk taking and organizing the production and sales process, just like workers earn wages. Okay? Profit is the impetus for the entrepreneur who runs the business. The profit is the reward to the person who earns this business. Business efficiency can be achieved through maximization of profit. Therefore, profit can be treated as a measure of business performance. See, it is a measure of business performance. If we have good profit, what we consider the business is going good. But if we have losses, we consider that the business is not efficient, properly working. So, business efficiency can be gauged through percentage of profit to sales volume or to capital employed or to the market value of capital share. So, percentage of profit is calculated through different ways. To a percentage of sales, it can be a percentage of capital employed, that how much capital I have employed, out of which, see, it could be two things. Profit can be calculated in two ways: profit divided by sales or profit divided by capital employed. So profit divided by sales will give the percentage of profit to sales, and profit divided by capital employed will give the percentage of profit that I am getting out of the capital that I have employed. So there are various parameters to calculate the percentage of profit on a particular metric. Now we will see what is business environment and how it is influencing the business. We saw like pestle analysis, political environment, legal environment, then we have environmental, economic. These all factors influence the business. How they influence we saw at the start, right, in short. Now we will see it in detail. The environment in which an enterprise can be functions is divided into two parts, external and internal. So what are external and what are internal? Internal means what? Which are within the control of that particular organization. The factors which are affecting the business, which are within the control of that particular organization, are internal factors. External factors relate to those factors which are outside the control of that organization. So we will see what are they. The internal environment includes factors which are under the control of the firm, like business philosophy, business priorities, management structure, capital structure. See, management structure is also within the control. The organization can change its management structure, improve its management structure, capital structure. It is decided by the organization only. It can control it. It can change the capital structure, right? So these are within the control of the organization, internal. External environment, on the other hand, includes factors which are beyond the control of the firm. What they can be? Legal factors, demographical factors, geographical factors, and government factors. See, legal policies, the organization can't do anything. It is beyond its control. It has to follow those policies. Government regulation, it has to follow them. So these factors are beyond the control of the organization. The internal environment includes all such factors within an organization which give strengths or cause weakness of a strategic nature. See, these internal factors, if they are good, they will provide strength to the organization, and if they are not that much good or bad, it will be a weakness of the organization. Now what they are saying? An opportunity is a favorable condition in the external environment which helps the firm to consolidate and have a sound footing in the market. An example of opportunity is sudden growing demand for the products that the firm produces. See, opportunity means what? Every organization might get an opportunity. The opportunity could be what? There is more demand for their products, so it will produce more, sell more. So at that time, if it produces more, the demand has increased and sells more, this opportunity will help the organization to gain more profit, right? So it is a favorable condition for the organization in an external environment. External environment was what? The environment which is outside the control of the organization. Now what is a threat? Threat is an unfavorable condition in the external environment which creates risk for the firm that leads to huge loss. See, if I am an organization and I am operating in a market, my threat could be what? If a new company or new organization comes into the market with lower price for its product and acquires the market share, my share in the market will get reduced, right? Acquires my market share with more quality product with less price, then it will take over the market share and my share in the market will be reduced. This is a threat. So that what will happen if this threat comes true? My business will suffer. I will get into losses. My profit increase will not be that much. My profits will decline, my revenue will decline, right? In turn, there will not be growth of my business due to this threat. Now, a strength is the positive aspect of the internal environment. Internal is the environment which is within the control of the organization, which the firm can use to gain strategic advantage over its competitors. See, every company has its own strengths and weaknesses. What could be one strength of an organization? It is constantly doing R&D, that is research and development of its products. So it is trying to improve the quality of the product with that same reasonable price. So when the quality with the same price is improving, it is that unique feature or strength of the product or that organization, right, Sheila?
Yes, ma'am.
Another is weakness. Every organization will have some weakness, right? It could be that management is not properly functioning, proper supply chain is not there, proper marketing is not being done. So what organizations do is they identify these weaknesses. They identify what is the drawback, what improvement needs to be made, and they take effective actions for this improvement. What improvement is then made? It could lead to efficiency, increase in profit, increase in sales, or whatever outcome which is beneficial for the organization. A weakness is the negative aspect of the internal environment which causes a strategic disadvantage for the firm. Examples of weakness is the failure of the firm to adopt diversification in the product line. See, if I am producing only one single product and any other competitor comes in, he brings same product in the market with more quality and reasonable price than my product. What will happen? My product sales will decline, the demand will be less, and in turn I will get into losses. So to reduce this risk, what organizations do is they diversify their product portfolio. Even if one of my product fails, the other 3 or 4 products are in such a good position that they are making such a good profit, or their sales are so huge that that loss of one product, that loss in that particular product, or the low demand for that one particular product will be recovered. So if you operate only in a single product, you don't have diversification of products, that could be your weakness, right? And this weakness can create problems in future for you as a business. Business pursues SWOT analysis. See, you know SWOT analysis? Strengths, weaknesses, opportunities, and threats. This SWOT analysis, every organization constantly does its SWOT analysis to lead to its improvement in its efficiency. To understand the external and internal environment. SWOT is the acronym for strength, weaknesses, opportunities, and threat. Through such an analysis, an effective organizational strategy can be formulated which capitalizes on the opportunities by using strengths and neutralizes the threats by minimizing the impact of weakness. This SWOT analysis is important for indicating the competitive strength and viability of the firm. See, how will the SWOT analysis help the organization? When the organization knows what are its strengths, it can use these strengths to create opportunities and utilize these opportunities. So if I get an opportunity like the demand for my product is increasing, I will use one of my strengths to get this opportunity and increase my profit. So threat, one of these weaknesses or threat, I have to reduce them. I have to use various strategies to so that my weaknesses can be improved, my threats can be reduced. External business environment. External factors in the business world which are beyond the control of any particular firm determine the external business environment. This external business environment can be classified into micro environment and macro environment. Micro and macro. We saw what micro means for individual household, individual organization. Macro means what? For the whole nation or the whole world in larger terms. National income, national employment, these are macro terms, right? Micro means relating to a specific individual household or a single organization. We will see how these external factors are affecting, that is the factors which are beyond the control of organization will affect the organization. The activities of customers, suppliers, competitors, marketing agencies, etc. in the immediate neighborhood of a business firm create the micro business environment of that firm. The micro environment of any particular firm may be different from that faced by other firms within the same industry. See, micro environment for every organization will be different because every organization has different customers, different segment of customers, different suppliers, right? Different competitors, different marketing agencies. So these micro environment differs for every organization. For example, if the supply sources are different, in case of two different firms, the micro environment will also be somewhat different, right? This micro business environment influences the strategic decisions by creating different business opportunities as well as threats. Now we will see what are the components of this micro business environment. Up till now, any doubts, Sheila?
No, ma'am.
Hello. Hello. Okay. Now, first component is the supplier. Supplier is the person who is supplying us the raw material, right? if the supplier faces any problem that he is not able to provide us raw material at the times when we require raw material, what will happen? Our business will get affected, right, Sheila? If we don't get the raw material at the required time from the supplier, our production will stop, right? And if our production stop, there will be bottlenecks in the production. The output will not come out at the delivered time. The wages of the laborers or the workers which are working in the organization, they will remain idle. So there is a lot of dependency of us on the supplier, right?
Yes, ma'am.
Hello?
Hello?
So you think there is a dependency on the supplier? Yes, there is a dependency of us on the supplier. So suppliers form an important component of the microenvironment. The suppliers provide raw material, equipment, services, and so on. Suppliers with their bargaining power affect the cost structure of the industry. They constitute a major force that shapes the competition in the industry. Firms have to take strategic decision on outsourcing or in-house production depending on their supplier environment. Outsourcing means what? They will not produce the product entirely. What they will do, some of the part, like suppose if there is a car and it requires some parts like tires, brake and other steering. So what it will do, it will not produce these tires, steering or brake itself. It will it will take these components from an outsourced agency, from some other suppliers or all these parts, and then use these parts to produce a car. It will not do this in-house production of the parts. So that is what we say is outsourcing. Now, consumers or customers. The aim of the business is to create and retain market, in other words, to create and retain customers. See, any business is operating on whom? The customers. If there are no customers for the product, the business will not sustain. It will no longer be in existence, right? There is no benefit of producing if the customer is not taking our product, right, Sheila?
Yes.
If we don't have a market share of customers, there is no point in producing because no one will take that product and we will be in losses. It will always remain in our warehouse. It will not get sold. Right? So customers play a very important role. So every organization has thinking ways to satisfy the consumers and retain the consumers. See, even if for a SIM, if you are converting your SIM from Jio to Idea or Jio to Airtel, they constantly call you. See, what is the problem with our SIM? We will improve, we will do this, we will do that, right?
Yes.
So what is their motive? To retain this customer, so that this customer does not go with the competitor product, right? So their motive is what? To retain this customer. So if once we change the SIM, we will be using recharge and everything, and that particular customer will go off Jio, right? So in this scenario, what is their motive? To retain this customer, and they will try ways so that they can provide good service and satisfy that customer. There are many different categories of customers: individual households, corporate houses and government. For example, Indian Oil Corporation has got customers which include individuals, households, state transport corporations, Air India, foreign airlines, etc. The bargaining power of all these customers and their changing preference pattern influence the business decision of producer firms. See, every company will have different segments of customers. It could be individuals, households, financial institutions, it could be state government institutions, it could be other organizations, right? So there are various segments of consumers for an organization. Now, competitors. See, competitors also play a very important part in any business. See, if I have lot of competitors, I have to be at a constant stage where my product is improving in its quality and is at a reasonable price. I have to advertise my product constantly so that my product gets sold. I have to constantly make improvements in the quality of my product so that my product has unique feature than the competitors at a reasonable price so that people will purchase my product. So, and what other things are like competitors, when we have a business environment, some things are kept as confidential or secret, unique features of the product or any things which are operating in a business are kept secret so that competitors don't get this information and they don't use this information, they don't bring these features in their product so that our product remains unique. Competitors are the other firms that compete for resources and for market. Competition shapes business. A study of the competitive scenario is essential for the firm to take strategic decisions, particularly in view of threat perspective of competition. See, competition is a threat risk to the business. Competition may be direct or indirect. See, direct competition is simple. I am purchasing a TV. I go as a customer to purchase a TV in the market. I can see various brands of TVs. Sony TV, Philips TV, Samsung TV, other various brands of there. So as a consumer, what will I see is that which of the TV is of good quality, has more features and is available at a reasonable price, and I will go and purchase that TV, right? Next is marketing intermediaries. Marketing intermediaries is simple. See, when we are bringing the product into the market, there are various middle people. Even if when I am selling as a car, as a Tata Motors, I will not directly sell the car to the consumer or the purchaser. There will be one showroom, right? In that showroom, my car will be presented, and that particular broker, that particular showroom person will sell the car. So this showroom person is an intermediary for selling me the car to the customer, right?
Yes, ma'am.
So there are various intermediaries while we deal with a business. So that could be like, again, if I am transporting my car to a place, to the showroom person, so this transport agency again becomes an intermediary for Tata Motors, right?
Yes, ma'am.
So we will say other things. So marketing intermediaries bridge the gap between the producers and final consumers. These marketing intermediaries include commission agents, transport companies, warehouses, advertising agencies, marketing research firms, media firms, and financial intermediaries. In a competitive business world, these intermediaries play a crucial role in expanding of any product, not only in the domestic market but abroad. See, these intermediaries also play a good role. We have to have good relations with these intermediaries because they are also involved in the functioning of selling the product to the ultimate consumer. If our relations with these intermediaries are not good, ultimately our business is going to affect. With the advancement of information technology, the scope for the activities of these intermediaries have expanded to a great extent. For example, the media firms help business enterprises in creating and maintaining their websites so that huge number of prospective buyers all over the world can get acquainted with the product. Next is what? Market. The market is a wide term, right? Buyer, seller, the buyer must be willing, he must have purchasing power, the seller must be willing to sell, the demand and supply forces in the market will determine the price of the product, right? The market is to be studied in terms of its cost structure, its price sensitivity, its growth prospect, and its attractiveness. The firm should study the trends and the developments and the key success factors in the market. See, every firm does a research of the market. There are some people who are doing constantly research on the changes in the market. What could be the changes in the market? See, what are the customer preferences changing? How the customer preferences are changing? Then second thing could be the trends in the market. Trend means what? If I am a person who is producing a cloth manufacturer, I would have to study the fashion, changing trends, fashion in the market, right? If I keep on producing the same type of apparel or cloth, will people purchase it? No. According to the trend, that is a change in the fashion in the market and people's preferences, I have to produce my apparel or cloth of that particular fashion, that particular trending. I have to make changes in my production. I have to do a constant research in the market. What are the customer preferences? What are the trends, the fashions? What new unique things I can bring into the market? So this research is required of the market for effective functioning and growth of the business, and organizations constantly do this research of the market. The dynamic business strategy of the firm will depend on the nature of the market. See, we saw previously there were different types of market we saw, Sheila, right? It could be perfectly competitive market, monopoly, duopoly, oligopoly, monopolistic competition, right? So we have to check in which particular market we fall. Do we fall in a monopolistic competition? Do we fall in a monopoly? Do we fall in oligopoly? Do we fall in duopoly or perfect competition? And according to this which type of market our customers are there, or in which market we operate, that will decide the strategy of the business. So whether the product's demand is elastic, inelastic, these all factors will help in determining the price changes and other things in the market. Organization. Individuals working in different capacities in the organization are the pillars of the firm, which form the strength and capabilities in the particular business. See, any organization, what is its main strength? The people, the management there which are working. See, if the people in an organization are not good, they do not have good skills or good expertise in their work, the particular work of that organization will not be that good, right? See, if there is in a consulting firm like Big Four, if the consultants only they are hiring are not that much skilled, or they do not have the proper knowledge to deal with the client, they will not be able to handle the client properly. In that case, the client will not get satisfied. So if the client is not satisfied, again the firm's reputation will come into picture, right? So while hiring a person, like, he should have the proper skills, the proper knowledge, the proper expertise required, so that the clients of the business get satisfied and the reputation of the organization is built. Clear, Sheila? Hello? Sheila, are you there?
Yes, ma'am.
So employees are the major force within an organization. It is important for an organization that employees embrace the same values and goals the organization would. Board of directors should run the organization in the way the best serves the shareholders' interest. Finally, the entrepreneur should be dynamic risk taker so that the profit of the firm catches the bliss level. See, another thing. These are the things hiring. So proper training should also be provided to the organization, by the organization to the employees. And the management of the organization should also be good. See, if the management is only problematic, it is not following the rules, regulations, and there is some fraud done by the management only, will the organization function efficiently? No. So in that case, the management should also be good so that the organization should function efficient. Not just the employees, but the management should also take decisions which are in the favor or the growth of the organization, so the organization will grow. The management is not good, it is doing fraudulent activities, then that organization cannot grow. Next we will move to the macroeconomic factors. See, these micro factors are relating to a particular individual. Like we saw suppliers, customers, right? They relate to these particulars. Now macro will be different. Macroeconomic factors. Macro business environment is entirely external to the firm. Like these are external, beyond the control. Macro factors are beyond the control, like the government policies, government regulations, political factors, legal factors. The organization cannot control these macro factors, so they are external factors. Thus, beyond the direct influence and control of the organization, but which exerts powerful influence over its function. See, these macro factors play an important role while the functioning of the organization. The principal components of the macro business environment are the economic environment, political and regulatory environment, socio-cultural environment, demographic environment, technological environment, and natural environment. The success of the business firm depends to a large extent on its adaptability to these dynamic factors of macro business. See, every organization has to adapt to these macro factors. So, when the business adapts properly to these macro factors, that is the political, legal, environmental, economic, social, it can function efficiently. The business opportunities and threats to any business firm largely depend on the forces of the macro business environment. By analyzing macro business environment, a firm can formulate its strategic policies to grab opportunities and take firm decisions to stay away from threats. See, this macro environment poses various threats to the organization. So, the firm will analyze these macro factors, which is the political, legal, economic, social, environmental, and whatever threats it will analyze and try to reduce or stay away from these threats. Components of macro business environment. The following are the components of macro business environment. Shall we take a 2 minutes break? It's 5:05.
Yes, ma'am.
We'll take some break. Otherwise, it will be difficult for you to grasp everything at once. 2-3 minutes break I'll take. Up till now, any doubts, Sheila?
No, ma'am.
Okay, fine. Any other doubts you can ask? Feel free to ask any doubt.
Yes, ma'am.
Hello, Sheila, am I audible?
Yes, ma'am.
Okay, we will start now. We'll complete this. First is what? These macroeconomic business environments are beyond the control of the organization. So first is demographic environment. So what is demographic environment? Demographic environment refers to what is the population size of the country, what is the distribution of income in that country, what are the tastes and preferences of the people in that country. So this is the demographic environment. So business is heavily dependent on population size, age structure, geographical distribution, ethnic makeup and distribution of income. Demographic characteristics and its change has far-reaching implications on further competitiveness of the company and also on formulation of strategic policies. See, this demographic environment, the income distribution, the population size, the age, the company will formulate its policy. Next is economic environment. The economic environment refers to the nature and direction of the economy in which the company operates. See, economic environment means what? Proper, if I am starting a business in that particular area or locality or country, do I have labor available, that skilled expertise labor available at cheap price in that locality? If labor is not available, it will be difficult for me. Do I have raw material available in that locality? Do I have other factors which are necessary for the production of my product available? So if these are not available, it will be difficult for me to operate. So before starting a business, I have to do an economic environment check, right, of that particular locality of country. Yes, Sheila? On the other hand, economic environment includes situation in resource markets like money market, labor market. Labor market means what? Proper skilled expertise labor is available at that particular locality. Proper raw material will be available to me, like transport facilities are good, infrastructure is good. Like if the transport facilities or infrastructure are not good in that locality or that country, my raw material will not come properly with me. There will be difficulties, there will be bottlenecks for me, right?
Yes, ma'am.
Raw material availability, services and supply market which influence the supply of inputs to the enterprise, their cost, quality and availability and reliability of supplies. On the other hand, economic environment determines the strength and the size of market. The purchasing power in an economy depends on current income, right? See, if people have more income in that economy, their purchasing power will be more, right?
Yes, ma'am.
If they have more savings, more wealth, more income, their purchasing power will be more.
More.
Price savings, circulation money, debt and credit availability. Debt and credit availability will also help in determining the demand. See, if proper credit facilities are provided, the demand will be more, right? I can take a loan and then I can purchase my car on loan, right? If proper credit is not only available for a purchase of car, will I purchase the car if I don't have money? I will not be able to purchase it, right? So these credit facilities are also play an important role. Income distribution pattern and propensity to consume together determine the marketing possibilities. Economic prospect of the country and the inflation rate has far-reaching impact on the operations of the firm. See, inflation will also play an important role in determining the economic factors. If there is inflation, recession, according to these economic factors, the company will decide its strategic policy, like what will be the price of its products. Will it produce more? In what quantity will it produce? So these factors determine the strategic policy of the firm. Political and legal environment. See, every business is controlled by the government in that country and the legal environment, legal laws, it has to follow, right? So these factors also play an important role. If the country bans a particular product or there are restrictions on a particular product, then it becomes difficult for a business to operate in that particular country. If the government of that country is not stable, like in Korea, you know that North Korea, what do you know, that one person who is very dominating, what is his name?